where the Treasury defaulted, um, where would Fed funds go?
You know, I it's so hard to predict what would happen in such an event. Um, the you can't even own. So the first thing is, um, I can't imagine what rate it would require for people to want to keep their money in government assets if the government defaulted. So I don't think it's a rate issue. Um, and you could see a massive dislocation. But then you take that to what would it mean to the private sector, and what would it mean to other countries? Because if you really were concerned and you believed that the world was not interconnected, buy some Tessabonos or buy some, whatever you might want to be, whether it's Mexico, Canada, or China, or wherever. The simple answer is gold. Buy something that is going to retain its purchasing power. And now the question is that a good risk return? Because getting into that and then getting back out in the event there was a resolution and the world, the United States didn't default, is going to be very, very expensive to buy all that you need in foreign currency, essentially. And some of those foreign currencies would blow up too in the event of a U.S. default. So I think it's so dramatic to be almost impossible to positions oneself um, to survive such a thing.
I think they would certainly take Fed funds rates to zero.
Yeah, but why would anyone want to save in dollars, regardless of the rate? Um, are they going to buy assets? Maybe, but with what money? If they're defaulted, they're going to owe money.
Hmm.
It's a complicated um, scenario to play out. The government defaults. The immediate reaction is going to be every U.S. bond trades at some discount to where it was before. A bill may go from 100 to 95. A bond that was trading at par may it could go to 110 because people expect the government to cut interest rates. But the initial reaction would be to sell
Quite.
because you're not going to get your money back. So once the initial knee jerk, which would be an incredible crash in the dollar, and a incredible crash in rise in short-term yields, because there's no yield in which not getting your $100 back in a month is going to satisfy you. So you're going to have a massive up move in yields. Um, the rest of the asset market is going to depend on what the resolution plan is,
Hmm.
and we don't know how that would be.
Well, indeed, and it's all silly thought, really. So let's turn to the notion of